Hey everyone! Have you noticed how quickly sentiment can change around a company that's heavily tied to Bitcoin? Just a few weeks ago, many investors were confident that Strategy, formerly known as MicroStrategy, was one of the strongest ways to gain exposure to Bitcoin. But now, concerns are growing after the company's preferred stock, known as STRC, suffered a dramatic decline and reached its lowest level ever. The big question investors are asking right now is simple. Is this just a temporary setback caused by Bitcoin's weakness? Or is there a deeper problem developing inside Strategy's financial structure? Let's break everything down. Strategy's preferred stock, STRC, recently fell to an intraday low of $83 before recovering slightly and closing near $89. While that might not sound shocking at first, it becomes much more significant when you remember that this security was specifically designed to trade close to its $100 par value. In other words, investors expected relative stability. Instead, they watched the stock lose nearly 17% of its intended value. The decline has not been caused by a single event. Rather, it has been the result of several developments occurring at the same time. To understand what happened, we need to go back several weeks. During mid-May, Bitcoin was trading above $80,000, and STRC was still holding near its target price. At that point, things appeared relatively stable. However, Bitcoin was already trading far below its previous all-time highs, creating pressure on companies whose fortunes depend heavily on the cryptocurrency market. Then another challenge emerged. A competing investment firm introduced a similar preferred stock product, offering investors an even higher yield. This immediately created competition for investor capital and raised questions about whether Strategy would need to make adjustments to remain attractive. Shortly afterward, Strategy announced a major financial move. The company decided to repurchase approximately $1.5 billion worth of convertible debt at a discount. On paper, buying back debt at a discount can be viewed as a positive decision because it reduces future obligations. However, investors became concerned when details emerged showing that some of the cash used for this transaction came from reserves that had been intended to support dividend payments and debt coverage. That revelation changed the conversation completely. Previously, the company had maintained reserves that could cover dividend obligations for roughly 2 years. After the debt repurchase, that cushion reportedly dropped to only a few months. As soon as investors learned about this reduction, confidence weakened and the preferred stock started moving lower. At the same time, Bitcoin continued its downward trend. Instead of slowing down its cryptocurrency purchases, Strategy kept accumulating additional Bitcoin. The company purchased thousands of coins even as prices continued falling. Supporters viewed this as a sign of confidence. Critics viewed it as increasing risk. Then another event added to investor anxiety. For the first time in years, Strategy sold a small amount of Bitcoin. The transaction itself was tiny compared to the company's overall holdings and had virtually no impact on its position. But markets often react to signals rather than numbers. Some investors interpreted the sale as a warning sign and questioned whether management was becoming less confident in Bitcoin's short-term outlook. As market sentiment weakened, both Strategy's common stock and preferred shares came under increasing pressure. The situation worsened when Bitcoin fell below major support levels and eventually dropped toward the low $60,000 range. Because Strategy owns such a massive amount of Bitcoin, every major move in the cryptocurrency directly affects investor perceptions of the company. Today, Strategy holds more than 846,000 Bitcoin, making it one of the largest corporate Bitcoin holders in the world. The company accumulated these coins at an average purchase price that is significantly higher than Bitcoin's current market value. As a result, the company is currently sitting on a massive unrealized loss worth billions of dollars. It's important to understand that these losses remain unrealized because the company has not sold most of its holdings. If Bitcoin rises again, those paper losses could shrink or even disappear. But for now, investors are focused on current market conditions rather than future possibilities. This pressure has also been reflected in the performance of Strategy's common stock. The shares have fallen dramatically from previous highs, highlighting how sensitive the company remains to Bitcoin's price movements. Despite all the criticism, Executive Chairman Michael Saylor remains extremely confident. According to Saylor, the company's overall financial position remains strong. He argues that when combining Bitcoin holdings with cash reserves, the value of company assets exceeds outstanding debt by tens of billions of dollars. From his perspective, the current situation is nowhere near as dangerous as previous periods when Bitcoin traded at much lower levels. Supporters of strategy share a similar view. They believe the recent decline is largely driven by market fear, forced selling, and short-term volatility, rather than any fundamental flaw in the company's structure. Their argument is simple. If Bitcoin eventually returns to higher levels, Strategy's balance sheet could improve dramatically, making today's concerns look temporary. However, critics remain unconvinced. Some market commentators argue that the company has become too dependent on Bitcoin and that continued weakness in cryptocurrency prices could create additional pressure on both shareholders and preferred stock investors. Others have even called for closer regulatory scrutiny regarding how the company markets its investment products. This disagreement has created one of the most polarized debates in the market right now. On one side are investors, who see Strategy as a long-term Bitcoin powerhouse, positioned to benefit from future cryptocurrency growth. On the other side are skeptics, who believe the company has taken on too much risk and could face serious challenges if Bitcoin remains weak for an extended period. So where does that leave investors today? The answer largely depends on one question. What do you believe happens next with Bitcoin? If Bitcoin stages a major recovery, Strategy could potentially benefit significantly, and confidence in both MSTR and STRC could return. But if Bitcoin continues to struggle, investors may remain cautious and volatility could continue. For now, all eyes remain on Bitcoin's next move, because Strategy's future appears more connected to the cryptocurrency market than ever before. What do you think? Is STRC's recent collapse creating a buying opportunity for long-term investors, or is it a warning sign that more downside could be ahead? Let us know your thoughts in the comments below. And if you enjoyed this breakdown, make sure to subscribe, turn on notifications, and stay tuned for more market updates, stock analysis, and cryptocurrency news. This is not financial advice.